My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content.
All right, guys, welcome to Property Profits Podcast. I'm your host, Bryce Kaminsky, filling in for Dave DeBow. And have you ever wondered how a former Toronto firefighter and professional poker player transitioned into a successful full-time real estate career? Well, today, my guest, Bryan Bouchard from Powerhouse Rental Groups, he's here to share his fascinating journey and insights into scaling from duplexes to apartment buildings. Bryan, welcome to the show. Great to have you here.
It's a pleasure, Bryce. Thank you for the invite.
Yeah, no problem. People listening at home don't get to see the giant $100. I don't know. It's like a funky $100 bill. I like the background. So, when we talk about real estate, a lot of people, I'm sure you get this question all the time, like, you know, as a firefighter and a poker player, why real estate? What got you into the business?
I was fortunate enough to stumble upon the right books at a young age. That's really where it started. Some of the same books that everybody else reads, you know, Rich Dad Poor Dad is what did it for me.
Yeah.
I was lucky enough to stumble upon that at age 21, I believe. And that's what shifted the mind for me. I grew up kind of a blue collar, middle class type of mindset. You work for money and you trade your time until coming across that book. And then I have a brother who's 3 years older than me. He also read that and he executed on it. So I had someone to kind of watch and get into the rental space. I realized at that age that real estate's a really good way to build your financial future. And it was just preached over and over in all of those Kiyosaki books. And I made it happen the following year. So I bought my first duplex at 22 in 2009.
Did you move into it and house hack it, or did you just keep your arm's length from it and just make it a pure rental?
Yeah, I moved into it. I think I was approved for a purchase price of $350,000 at the time. And I spent $260 and lived in the upper unit and rented the lower. So, I mean, just with those figures alone, obviously I was living very affordably by renting the basement as well.
Yeah, because that, you know, especially with the cost of things, especially when you're trying to like start things and do things, it is nice to offset your living expense. You know, I don't know if it offsetted it completely, but what did you say, a 260 mortgage?
Yeah, 260. I only put 5% down, which is 13 grand.
But even then, you've got your lower and your basement unit.
Yeah,
so for sure, you're at least covering the mortgage and maybe probably a little bit of change in your pocket.
Yeah, I think at the time it was $900 a month for the basement, 2-bedroom, my very first rental, something like that. Ended up getting it up to like something like 1,700. This was in Ajax, Ontario, and yeah, that really helped me cover my expenses and allow me to get that second property sooner. And I think the second property came 7 months after that.
And so what was the second property?
Second property, I was in a relationship at the time. Girlfriend didn't like living in the upper unit of a house hack. So my house hacking lasted 7 months. We moved into a townhouse, bought a townhouse in Pickering, moved in it, did not rental, have a rental unit in it, obviously. And then rented out the upper unit of the duplex. So I had 2 rental units at the time until I got the third property.
Nice. Yeah. Women, there's like this saying that women drive real estate. You know, they don't want you to live in your parents' basement. So they say, get an apartment. And then they're like, well, I don't like your single bachelor apartment. So we need a 1-bedroom because I'm moving my stuff in and your closet's too small. And then boom, suddenly you have a kid and now we need a 2-bedroom house and boom, another kid. Now, so it's like women really do drive real estate, and left to our own devices, we'd probably still be hanging out in our parents' basement, saving money. But, when you look at the early part of your career, is there anything you would have done differently in real estate, knowing what you know today?
Yeah. I mean, in those days, 2009, 10, 11, there wasn't as much educational material out there. Right now, you can get educated really fast just with a few YouTube channels or podcasts, and you can get the info on raising capital, joint ventures, and do some advanced stuff right off the bat. Back then, I was listening to some podcasts and I was interested in the education. I was reading the books and stuff. I didn't have a mentor that would have been helpful, having a mentor or a coach. So in terms of raising money to expand faster and even doing joint venture deals where the partner would bring the capital and stuff and I would expand, that would have helped me like just gather a bunch of properties in those early days when property prices were cheap. Whereas I was waiting, I was doing everything myself. I had 100% ownership, no investments, no investors and no partners. So I would wait until I had enough of a down payment to get that next property. I did house hack 2 more times after the additional one. So, I got 5% down, I think 3 times, and then 10% down once. So that was the way that I was using leverage.
Mm-hmm.
And that's a really effective strategy too, is just kind of keeping your down payment small.
Yeah, I remember when I started in real estate, you could buy a house in Winnipeg for like $51,000. And then yeah, you had to put some money into it, but um, that same house today, you can't buy it for like less than 100. So things have changed. And we always look back at the beginning being like, man, if I could have just grabbed 10 of those back in the day, I'd be a smiling, happy guy today. But the second best time is today. So you might as well go because it doubles every 10 years. So 10 years from now, we'll be saying the same thing. So might as well get to buy. And now, what's the real estate looking like these days?
So I was in that 2 to 4 unit space for several years. I ended up leaving my job to play poker professionally
Mm-hmm.
and did that for a few years in my mid 20s. And that put my real estate career, investment career on a standstill because I wasn't getting mortgages anymore. I didn't have income on paper. And again, this goes
Yeah.
back to not having the education to do some creative stuff. So I wasn't buying properties. I was playing poker and things like that. Got hired as a firefighter 2013. I had T4 income again and started, ramping up the portfolio, getting a few more properties. And then in 2020, that's when I made the switch after kind of hitting the wall on residential mortgages. It's time to move into commercial. Bought my first commercial property, which was a 7 unit. And then that's when I incorporated. That's when Powerhouse Capital started and I started really advancing. And ever since then, I haven't bought a 2 to 4 unit property since then. It's all been 5 to 15 unit buildings. And that has led me up until recent times. I'm still doing that kind of BRRRR method on the apartment buildings, but I'm finding it harder to find those true value add projects that are worth my time. And
Mm-hmm.
I've now gotten into the brand new build category where we're buying land and building the apartments from scratch.
Well, and certainly you're talking about it in Canada, right?
Yeah, in Ontario. Yep.
Yeah, when you look at the business, you also look at it and say, with the new programs that are coming out to build things, um, it's almost, it's like you can either swim against the current or you can swim with the current. And especially here in Canada, the government kind of sets the tone as to what advantage you can have. It's like you might as well play the hand that they're playing because they dealt the cards. So people are really jumping on. It's yet I'm not entirely convinced personally that it's going to be super great for investors, but a 5% down 50-year mortgage to construct something or to buy something, these are like relatively, like, the bank's not going to give you that. So you have to play the hand that the government is dealing because that's what they want. So there's some people that would swim against the current. And I always say, whatever's happening in your market, that's opportunity, because it's not so much that we're like trying to generate opportunity. So we have
Mhm.
to identify the opportunity. So when you started down that road, how long have you been looking at the multifamily construction?
It has been in the past 6 months. And you nailed it with that point there. I couldn't agree more. The biggest opportunity is the MLI Select, which applies to the existing buildings and the new builds. So I like applying that strategy to both. I'm still interested
Mhm.
in the existing buildings. That makes sense. Putting the small down payment and leveraging. But two more things came to the table recently in the past year or so, and one was not going through site plan approval up to 10 units. So
Yeah,
building
that's
building
huge.
those apartment buildings up to 10, you speed up the process and lower the fees. Huge incentive. And then the third one, which really made it, my opinion, my favorite strategy, which is the HST rebate, getting the full 13% back
Yeah,
on the
yeah.
build costs. That goes to your profit and makes it incentivized enough to switch to that. And I've always liked the idea of having nicer, newer products with no rent control, quality tenants that have been um, screened properly. And this is the opportunity to do it. So, like you said, play within the rules that are given to us. And when they give these incentives, it's time to jump in.
Yeah, because they're going to give you something like 20-year rent control exemption or something like that. I know in Manitoba it's 20 years. So there's lots of advantages. Are you worried about the low rent? Because they are going to have their hands in your pie when they say you have to rent it for XYZ to get the points and qualify for the program in a certain way. Are you concerned about that at all? Or are you just going to play with what they allow you to do and thinking like 30, 40 years down the road instead?
We're avoiding the affordability side altogether and just building them energy efficient and getting the points that way.
Ah, see? The hand, it's all, the same hand can be played two ways. So that's
The
really interesting.
affordability side works in certain provinces where that benchmark, call it 1400, and then like average rent is like 11 or 12. So like market rent is below where the threshold is right now, with some room for those rents to increase and still stay within the threshold. But if you're trying to do the affordability in Ontario, it's around the same. It's like the average income in Ontario and Alberta is very similar. So they set that rental threshold very similar as well, but the market rents here are way higher. So if you're going to rent
Yeah,
at
way
1300
higher.
Ontario, you're not making money. It's too big of a spread. Like I get the idea and the why they're trying to do it, but it just doesn't work well in Ontario. So we're going to energy.
Yeah. Well, that's interesting. So, um, what sort of accommodations are you having to make to meet the requirements for the government when you building these buildings versus what a standard construction would be?
Likely insulating using ICF foundation
Hmm.
to get better heat insulation right off the bat. It's not as expensive to do as it was, so that's a good one. And then of course the biggest way to get that energy efficient program is the heating system and the heat
Yeah.
pumps. Heat
Heat
pump
pumps.
ductless units are the way to do it. The way to do it. Maybe you have to do uh, your last things by getting some extra energy efficient appliances or plumbing fixtures, windows, things like that. But the bulk of it's going to come from properly insulating and doing the heat pump system.
Yeah, because it'd be easy to just, like if we thought about the cheapest way to build a 10-unit building, it's certainly not going to be the energy efficient. It's going to be on piles, maybe it's going to be baseboard heat. It's going to be whatever we can do to put the thing together. But when you're trying to meet that, are these to hold forever? Is that the plan?
Yep, decades at least.
Awesome, awesome. So, along your journey with everything you've done in real estate so far, what would you say your secret sauce is? What comes easy to you that other people might find difficult to do?
I think I'm good at the higher level strategic approach, thinking about the bigger picture, trying to forecast all different scenarios. This is plan A, B, C, and D. This is our A, B, and C exit. This is, using my experience, what we can expect here. It's like analyzing deals, analyzing the future of it. That kind of stuff, the strategic approach, as opposed to the tactical on the ground management and just managing contractors, all that kind of stuff. I'm less interested in that. I'm more interested in the strategic side. I'm also the type of investor that wants to scale up and do bigger and better every project, as opposed to like finding my niche and then like repeating it over and over. Nothing wrong with doing that. You can become an absolute specialist, but I'm more of the type to focus on growth over specialization.
Yeah, it can get a little bit boring, rinse and repeating. Like when we were flipping properties for like 3 or 4 years, it was just like the same colors, the same thing, just like that other house we did, and then it would be done, and it'd be like, okay, cool. So it's just like babysitting. It became babysitting contractors, which I do not like. So I totally feel on that. Now, with everything you've accomplished so far and your future plans, what would you say your biggest obstacle is these days?
Um, Finding the right partners, because I've done a lot of this on my own, especially for the first 10 or 12 years of the career. I did it all on my own. So just in the past 4 years or so, it's been introducing partnerships, not only investors, but like active partners that I want to grow with, and finding people who are aligned with my vision, lifestyle, everything, people I want to work with and communicate with on a daily basis. It's not easy. I have a couple of people now that I am partnered with. I want to just keep growing that and building a team, building a group of investors, and have opposing strengths and weaknesses, right? Like if I'm good on the strategic side, I don't want to partner with someone who's also good on the strategic side and we just talk strategy all the time. I need that tactical person who's like
Mhm.
just a boss at implementing the strategies. All right. So finding that balance on the personality side, who has the vision, opposing strengths, opposing weaknesses, those are the ideal partners.
Yeah, I remember I was at a speech about other people's money, and the guy said, if you're going to raise capital, is there anything else they could bring to the table as well? Like if you're going to raise capital from A or B, and B is also an accountant, then it's probably in your best interest to leverage the person who has more than money to add to your business. So I always thought that was really interesting. We always just think, oh, money partner, but it's a partnership. Maybe they can bring more to the table. So what are you doing right now to fund your deals?
I um I believe that the active partners should have skin in the game in all of their properties. I do the same. Any property that I'm raising money for, I'm putting my own money into it. I've been able to refinance a good chunk of my portfolio and then liquidate the ones that don't really make a lot of sense in the smaller 2 to 4 unit range. So
Mhm.
I have liquidity now, which is nice. So I'm using my own funds and also partnering with builders on the equity side to do these brand new apartment builds.
Yeah, because that's the one thing. When I looked at that program, I was like, awesome. What are you going to do about the fact that constructing things like doubled and tripled since, like, I can remember we had this project scheduled. It was supposed to be like a 4 or 6 unit. And then suddenly the permits and the fees and but like as the time went on, the number of hurdles kept increasing. And then we're like, okay, well, what's the dollars per square build now? And they're like, well, it used to be 115 and now we're up to like 176. So it was just per square foot just went out of control. And so how you're managing that by partnering with the builder a little bit and hoping to get the price down a bit, or what are you doing to manage the construction cost?
Yeah, so I think the ideal strategy is to partner with the builder on the equity side because they have a strong incentive to keep costs as low as possible, as well as design the buildings that make sense for rental units.
Mm-hmm.
Partnering with a builder who understands the business of landlording and wants to be a landlord for decades, you can feel confident that they're going to do what you would want them to do in the construction side. So yes, we're building at cost, which is very good. You give up 50% equity, 40 to 60% equity. That's typically the split. But I like that. This is a longer term game, and I want to feel comfortable that we're on the same page as opposed to just hiring a builder and paying them their contracting fee and then having to manage and make sure that they're not
Yeah,
cutting
you've
corners
kind
on
of
things.
stitched them into the pie, like they're going to eat too. So when they eat too, maybe they're going to bring better ingredients, better workmanship, better futures. Like they're not just building they're not just building Brian's building, they're building their building with you as partners. So that definitely keeps control on it in its own, like in a kind of natural way.
It does. And yeah, like beyond like the incentives of building, we put a cap on the build costs. So, and we put a contingency in place of course, and then there's a cap on the build cost. So there's a really strong incentive to stay in budget. Whereas if you're just paying them contractor fee, they're just gonna prices went up or there's delays for this reason, this and that. So
Mm.
I think it just ensures everyone is focused on efficiency and speed.
Yeah, I couldn't get my guys there. Everyone's sick. Windows are late, whatever.
All the reasons.
So what's one of your strategies right now to get access to money to fund your deals?
I use my own network. I use social media for that. I don't pump it too hard. I don't have like a trust where we're always raising money. I raise money per deal. So
Mm.
as we have something, I raise for that deal only until we scale into that structure. But I'm finding it hard to find the deals that really meet my criteria and my benchmarks. My benchmarks are pretty strict. I look at deals every day, or my team does, and if something makes sense, then we'll move forward with it. And then we start talking to investors, and I have my list just from my own network, friends, family, coworkers, and then um, investors from social media and stuff like that. I mean, that's kind of where I'm going to be spending more of my time because, as I said, this new build strategy is going to be pretty passive for me. It's not going to be involving my time. I'm the money partner. I'm either going to use all my own money or bring other investors into these deals at the same terms that I'm getting. So my
Mhm.
time is going to be spent on those investor calls, building the relationships and seeing who wants to get into this nicer, newer product.
So do you find that you're getting existing capital as your projects move on, but The first thought for me is if you're holding and you're sinking in and doing some refi, are you having to raise new partners every time, or are you able to bring existing partners into these deals?
Yeah, good question. It's a combination of both. Some people have a bunch of money, maybe 100, 200,000 for whatever reason. They sold their property, refinanced, or they have it, and they're kind of a one-time shot for a while until
Mhm.
they build up that amount again, depending on their financial situation. But the more experienced, mature investors that have access to capital from a variety of different investments and businesses and things, those are ones that might just fire 100, 200, and then the next one comes up, let's do it again, test this, test that, it's performing well, let's do another one. So obviously we want the investors that are going to repeat. And I have this conversation with investors always in the beginning, like, if our strategy is to refinance in 5 years and you pull all your money back, I'm expecting that you're going to like what we're doing and put that money back into the next project in the 5 years. And everyone's always like, yeah, I mean, that makes sense, but that's 5 years away. We're going to have other projects that come up in the meantime. So yeah, it's a combination of using existing investors and new.
And they might have other projects for their own money too, like getting married, having kids. 5 years is 5 years. So, in the best case scenario, we get them to recycle, and a lot of times, we do have to find new partners, especially in the buy and hold game. So, what have you found to be most effective for expanding your network of investors?
I think it's showing people what you're doing. It's constantly showing people what you're doing without asking for money. It's just showcasing what your business is. And if you want to share numbers, that's even more insightful. People love numbers. People love to have access to how much money you're putting into this, how much you're taking out, return on
Mhm.
investment, and without pitching something, right? They just see it over and over and over, repetition. And then when that opportunity comes, we've got a good deal. They're like, yeah, I've seen Bryan before. I've seen his deals. He knows what he's doing. And
Mhm.
those calls are a lot easier to happen as opposed to the people who are kind of shy on social media and don't put themselves out there until they have a deal. And it just looks like they're always selling and
Yeah,
that
they're
turns
only
people off.
talking. Yeah, it's like you're only reaching out to people when you need something, and that turns people off, like you said. So, what have you found to be most effective in keeping touch with your current investors, the ones that are already in deals or the ones that are maybe thinking about getting into the next deal?
I like to use email campaigns for that. Email blasts, so just like updates, maybe some educational stuff, showing what we're putting offers in on or due diligence before we're asking for money. They're kind of seeing what's going on behind the scenes that I don't post on Instagram, for example. So that email list is probably the prime method of communication for those people.
And so you kind of answered this a little bit before, but are you a find the deal and then the money, or do you prefer to have your capital lined up and then go looking for deals?
It's both. Like you definitely have to put almost equal amounts of time into both. But like I said, when you're showcasing what you're doing and constantly bringing awareness and growing your network in general, just telling people what you're doing, you're kind of softly raising capital. You're not asking for it yet, but it becomes a lot easier when you do have to make that ask. So it's
Mhm.
kind of building it I kind of as a secondary means. And then, when the deals come up, that's when you kind of, you test everybody. But you can kind of test everyone as you're making offers and having like going through due diligence and then presenting it to people, going through the full process. And if people say yes and you don't end up going through with that deal, then essentially you have the money lined up and they're just waiting for the next deal. And it also looks like it proves that you're disciplined and you have strict underwriting. Like the deal was good, but we didn't go forward it because of X, Y, and Z. So the next one's going to be even better. And now they have even more confidence in you.
Yeah, like not just doing every deal because you got it under contract, but vetting it out so that they're profitable. Now, are you presenting by the deal these days, or have you started moving towards the kind of business model like I invest in Bryan?
I haven't gone to that yet. This transition into new builds is kind of where I'm focused and excited about. So we're seeing a few opportunities to actually buy land and buy old houses and knock them down and put small apartment buildings in. So I think it's going to be lucrative and opportunistic, especially in the area that we're focusing on, which is the Windsor region. So I think we're
Mm.
going to be doing like capital raising events and presentations to show the model in general, because I think we can pick these up pretty quickly. So it's somewhere in between what you're talking about. It's not going to be a mutual fund trust, but it's like I think we're going to have an ongoing amount of deals that we can jump on.
Nice, nice. And you're doing a lot of like we talking. Who's we? is it you and some partners that are putting these things together, or what does that look like?
Yeah, so I'm referring to myself, I'm a builder, and the other partner who's also going to be on like the capital raising side.
So you have a
There's
team you're putting together to really execute this thing. Awesome.
Yeah.
Awesome.
Yeah. And I love that. Like that's what excites me too, is having these strategy meetings and staying in touch as opposed to doing the whole thing yourself. It kind of
Mhm.
it's boring when it's just a one man show and you're wearing all the hats, doing all the things. And when shit goes sour, it's all on you and you have no one to kind of brainstorm with. And I just like working with a team better at this point in my career.
Yeah, the real estate can certainly be a solo endeavor, but with as it grows out, you're going to be into larger and larger multifamily, the complexities of permits, etc. Like you almost have to be partly a builder, but it's good that you got the builder on board because now they're facilitating that quadrant of the people in the business because the money people in the deal. You've got you're I guess in the grand scheme of things, you're kind of the deal hunter then.
We're all looking. We're all looking actually equally. I mean, one of the partners is a real estate agent, so he's sending some stuff. I'm kind of the deal analysis guy, the numbers guy, and then the builder's quickly there to talk about zoning and how many units we can build and what it would cost. So, like between the three of us, we analyze the deal pretty damn fast.
Yeah, that's really important because deals do come and go really quick. So
Yeah.
for people to invest significant amounts of money with you, capital, they need to know, like, and trust you. What are you doing for those sorts of things with the business and your own personal brand?
I've doubled down on the personal brand side to kind of showcase more of who I am, and with that, it's so much more than real estate. That's what I'm showing nowadays. I have the obsession with fitness, personal development, and mindset. So a lot of my content is outside of real estate. I'm just kind of showing all my passions. Real estate is where I made the money. That's where I search for profit. But on the purpose side, there's more on the self development and helping people. Coaching and that kind of stuff. I think that's where I see my position longer term. Real estate's going to be where the profit is, but like I said, the purpose is going to be in that self development space.
Nice, nice. So if people want to connect with you, they want to find out more, or what should they do? How do they find you?
Instagram is where I'm the most active. Bryan the Investor. You can find me there. You can message me there. That's where I'm posting most of the stuff. It's on all the platforms, but Instagram.
Yeah, Instagram is the place to connect. There's no confusing it at
Yeah.
Bryan.the.investor.
Yeah.
Easy.
Pretty
I
easy.
really appreciate you stopping by, Bryan.
Likewise, man. It's been a pleasure.
Yeah, no problem. And until next time, guys, we'll catch you on the next episode.
Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewyou.com. Now at moneypartnerformula.com, we help real estate investors to create a process for predictably getting capital so they can do more deals without relying on hard money lenders or the banks. We do this by building them a private capital marketing system. Now, if you want help turning yourself into a big money capital attraction machine, then book a call with our team to see how we can help. Just visit moneypartnerformula.com to find out more. All right, take care, and we'll see you on the next interview.